Are you a business owner? Are you looking for a fast, easy, and secure business loan? Turn my business with Dolla.
Getting a business loan has never been easier. Let Dolla help you plan ahead and take your business to the next level.
With 30 months to repay, competitive interest rates, flexible payment options, and 24-hour approval, financing your dream will be a breeze.
And applying is simple. All you need is your ID, your TRN, your proof of income, proof of address, and your business registration.
Well, of course, conditions apply. But trust us, it's worth it.
Apply today and turn your business dreams into reality.
Definitely at Dolla.
With a loan portfolio of $2.8 billion, Dolla Financial Services ended their 2023 financial year on December 31st, 2023, with a profit of $451 million. Today, the Dolla Financial team will be providing more context about this last quarter and the last year in this, their fourth quarter earnings call for the financial year 2023. I'm your moderator for this call, Renee McDonald, Chief Operating Officer and Investor Relations Lead of Learn, Grow, Invest Limited. Please join me in prayer as we prepare to start this call. Heavenly Father, we give you all glory, honor, and praise, Lord. We thank you for the availability of this platform, and we thank you for this company, Dolla Financial Services, that has offered themselves, Lord, to excellence. We thank you for bringing us together as community, as clients, as investors, to be able to hear more about the business of Dolla Financial. We thank you for the transparency of this company, and we just pray your covering over this meeting, over this call, in Jesus' name. Amen. Now, please join me in welcoming Mr. Ken Carr, the CEO of Dolla Financial.
Hi, good morning, Renee.
Good morning, Kenroy. Welcome to you and your team, and thank you, as always, for availing yourselves to the community of investors that's interested in Dolla Financial.
Thanks, Renee. It's really a pleasure to be here. As always, we've always been about sharing and ensuring that we offer full disclosure for what's really driving our numbers, and we've made our commitment to be here in good times and in bad times. And of course, I'm hoping that it's always going to be good times, but that's really our commitment to ensure that we are sharing with our shareholders and our other stakeholders about the decisions that are happening in the company and what's really driving our result. So it's really a pleasure to be here, and thank you for continuously facilitating our earnings call on your Learn, Grow, Invest platform. So I just want to say a special morning to our viewers, our shareholders, and all other stakeholders who have decided to join us this morning. I am Kenroy Carr, the CEO of Dolla Financial Services, and on our call today, we have a few of our team members who will also provide a little insight in their respective roles and how everything ties into our overall financial performance. So on our call, we have Trevi McKenzie, who needs no introduction really. She's our group CFO, and she'll provide a summary of our financial performance for Q4 and for the 12 months ended 2023. We also have Tashoni Ellis, who is our marketing manager, a group marketing manager, and she'll give us an update as to some of the strategic things that Dolla has been up to for the last 12 months, including some CSR activities which are really critical for the business. We also have Kurt McKenzie, who is the head of credit and collections, and he'll give us a little insight into the quality of the loan portfolio. And finally, we have David Henriquez, who is, of course, also needs no introduction. He's the CEO for Ultra Financier, and he'll provide some update on that segment of the business. All right, so our performance and results over the last 12 months have really shown significant growth for the business, a lot of improvement we've seen in all of the key performance indicators that we really track on a daily, weekly, and monthly basis. And it is really quite a phenomenal performance year over year when you compare the results of 2022 and in 2023 would have seen growth in all aspects of our business. And before I get into some of these highlights, I just wanted to take a moment to just highlight that the impressive results that you're seeing that have been published are really a result of our dedication and our commitment to providing innovative, easy, and flexible solution, to our customers. And we have paired this with a level of service that is consistent with the customers, that is above and beyond the customer's expectation. So that's kind of one of the driving force of our success, the unwavering commitment on and support of our board members, our team. I know some of them are on this call today, others are not, but it's really a collective effort of the team that have such ambitious goals that really align with Dolla Financial, and that has led us to do extremely well. Both team members who have made contribution in 2024, some are no longer with us, like our former CEO, Kadim Mears, who left us about in July, but all of those contributions would have led to a really phenomenal performance. And finally, the exceptional performance is a result of the prudent approach that we take to lending, collections, and of course, how we manage cash on a daily basis. So I'll just go through now and highlight a few of the KPIs that we track, and just to give you a quick overview as to what they're looking like. So our loan portfolio, after provision was made for expected credit loss, ended in 2023 at $2.8 billion. And now this represents about 85% of our total asset. Total asset was about $3.4 million, and which showed an increase of about 53%. But the loan portfolio would have increased by 65% year over year, which is quite significant. Still on the balance sheet, our shareholders' equity would have improved by 37% year over year and ended the year at $988 million. And we are really happy that we were able to again pay dividends in our last quarter, which totaled approximately $52 million. And we're happy about this because, I mean, a lot of our investors are really our customer, and this really shows our commitment to ensure that persons are actually getting a return on their investment. When you look at the income statement, our profit before tax was up 53% from about $290 million in 2022, and that increased to $451 million at the end of 2023. And a key thing for us, interest income, we hit record numbers in 2023, surpassing the $1 billion mark, which is really phenomenal. And we ended the year at about $1.2 billion in interest income, representing a 64% increase year on year. And importantly too, our efficiency ratio at 46% was quite phenomenal. This is actually coming from 51% the prior year. So you've seen some improvement in our operation and how efficient we have been operating. And I won't touch too much on this, but in relation to the loan portfolio, the quality of this very important asset of the business. I mean, we are a loans company, so this is really very, very important to us that the quality remains really robust, and we can see that the trend has, the figures have really been trending in the right direction. When you look at ECL at 3.8%, this is a record low for the company, and this may even be a record low for the industry. And it's really a result of just, again, the prudent approach that we take to lending and some of the key things that we put in place to ensure that the quality of the loan portfolio, again, remains really robust. And our non-performing loan would have ended the year at 8.2%, which is a slight increase over 2022. However, it is still way below what we would have had in our budget, and again, way below what is normal for the industry. And before I hand over to Kurt, I just want to highlight that we were really excited to have received or won the second runner-up for the Corporate Disclosure and Investor Relations Award at the Jamaica Stock Exchange Award in 2023. This is really a big deal for us. It's really the first year, the first full year that we would have been listed on the Jamaica Stock Exchange, and the first year would have qualified for an award. And it really speaks volume in terms of our reputation and really demonstrate our commitment to transparency and accountability to our shareholders, our investors, as we have been doing over the last several quarters. So at this time, I'd like to pause and hand over to Kurt McKenzie, our Head of Collections, who will take us a little bit more into the loan portfolio, what the quality looks like and what's driving those numbers. Thanks.
All right. Morning, everyone. I want to say a special shout out to the Learn, Grow, Invest team. I want to thank you guys for having us on your platform so we could have this earnings call and have a full disclosure to our clients and our shareholders and everyone at general. And I want to give a special shout out to the directors, our team, the management team, the staff in general, and especially our clients. All right, Kenroy, seeing as if you overstepped the show for a minute, but let's jump right into some special statistics that everyone is crazy about and wondering what's the secret sauce behind these performances. All right, as outlined there, we have the portfolio that we're going to discuss, and the secured loan ratio compared to the entire portfolio is at 82%. It's a slight increase from the last reported earnings call, which was at 80%. I mean, this in itself is an advantage, and it's also a contribution to the improvement in our ECL, as we have less vulnerability in terms of unsecured loans. All right, as mentioned earlier by Kenroy, we reported an impressive ECL performance at 3.8%. I mean, just being a single-digit percentage, that's really impressive, coming down from 4% from the last time that we reported. And overall, our non-performing loan, we rounded out at 8.2%. As mentioned by Kenroy, it's a slight increase year over year, moving from roughly 6% to 8%. But generally speaking, it's way below what we budgeted for. And compared to the industry, this is really an impressive performance. All right, let's take a look at the portfolio in terms of the industries and the sectors that we've tapped into. Dolla continues to strategize by tapping into several industries, and this always provides a room for growth and opportunities to strengthen the business and our foothold overall. Our major players continue to be the real estate and transportation, as we have that special product, One and Ready, that really continues to drive the income impressively, and we'll just continue to tap into that, and wherever the opportunity provides itself, we'll definitely tap into other sectors. In terms of the subsidiaries, Guyana, despite the geopolitical issues, still holds its 5%, and Ultra is increasing actually at 30%. And overall, we continue to strategize and strengthen our foothold in Jamaica, and we'll definitely be continuing with that. And at this point, we'll be handing over to Tashoni Ellis, who will definitely be speaking about her initiatives and what we have been up to in terms of our corporate social responsibility.
Thank you, Kurt. Good morning, everyone, and thank you for joining us on our quarter 4 earnings call for the quarter ended December 31st. So I will jump into our CSR and strategic initiatives. In previous quarters, you would have seen how Dolla has consistently demonstrated our commitment to social responsibility. And this is evident in our donation of $480,000 to the Math and Money Challenge project, which was geared towards providing investment accounts for 80 youths in the Tivoli Gardens community. So as you can see, this reinforced our dedication to educational initiatives and overall empowering youth in financial literacy. We also engaged in a beautification Labor Day project at the Mustard Seeds communities. This demonstrated our support for community development and welfare. During the fourth quarter, Dollar continued to intensify its CSR efforts. We donated $200,000 in financial aid to a house fire victim in Westmoreland. As you can see, our commitment extends beyond community upliftment to assisting individuals in crisis situations. Dollar offered a scholarship to a primary school student through our Dollar Scholar product, and one of our key mandates is to invest in the education and future of promising young individuals. We also participated in the Birds Charity 5K event. This was in support of the construction of housing units through Food for the Poor Jamaica. This aligned well with our commitment to Jamaica's ongoing social development. Additionally, we launched our breast cancer awareness campaign in October. This saw us partnering with Royal Medical to cover the cost of 10 mammograms for our customers. But one of the most impactful donations we did last quarter was our donation of $1 million to the Bustamante Children's Hospital. This facilitated life-saving heart surgeries for children in need, demonstrating our dedication to healthcare and building a better future for our children. Last but not least, we launched our Dollar 12 Days of Gifting initiative in December 2023 under our Dollar Full Christmas campaign. So the initiative really kickstarted with our donation of $250,000 to the Jamaica Social Stock Exchange. This initiative was extended across all our 10 branches, our corporate offices, and even Ultra Financier. We visited the following homes. We visited Faith Care Adult Center. We visited the Manning's Boys Home, Clifton's Boys Home, and Jamaica National Children's Home. We provided donations such as toiletries, wheelchair, cash, and also other non-perishable items. So now moving on to our strategic initiatives. In addition to our CSR efforts, Dollar has executed several strategic initiatives aimed at enhancing brand visibility and driving growth. We launched the Turn Up Your Business and the Dollar Full Christmas campaigns in the fourth quarter. And as you can see, these initiatives effectively showcased our products. It boosts sales, it increased brand recognition and awareness during the festive season. We also established a partnership with Optimum Distributors. This partnership provided our customers with up to 90% financing for dental needs, reflecting our commitment to expanding financial services and accessibility. Moreover, we collaborated with General Accident for their Customer Appreciation Day in December. This enhanced our brand visibility and reinforced our customer relationships. Finally, the conclusion of the $1 Million Woman campaign in December resulted in 3 winners who were awarded $1 million each through a pitch competition. The campaign was geared towards really empowering female entrepreneurs to grow or start their businesses. So looking onward to 2024, Dollar remains dedicated to both our CSR and strategic initiatives, reinforcing our commitment to making a positive impact on communities we serve while driving sustainable growth. Now I will hand over to David Enriquez, CEO of Ultra Financier.
Morning, everyone. Thanks, Tash. To the Learn, Grow, Invest team, thank you so much for having us here for another earnings call. For the year ending December 2023, Ultra was pretty proud to have reached our loan book total of 847 million, which, as Kurt previously let you guys know, that this now stands for 30% of Dolla's entire portfolio. So our 847 million spans about 44 clients. And, with the funding that we have coming in, we're really pushing to grow our loan book, obviously very prudently. But we are looking to grow exponentially as we move through 2024. At the end of 2023, our NPL stood at 3%, which is obviously higher than we would have liked it, but it is nothing to alarm us nor the public. This 3% stands at potentially 4 clients, which we are actually in the process of having everything sorted out. So it's nothing to panic anyone. But it is just obviously something that we remain aware of. So the total collateral held by Ultra currently is just about 2.4 billion. And that obviously includes blue chip stock, real estate, both urban and rural, motor vehicles, private and commercial, fleets, etc. As we move on, we are seeing that the collateral that we do hold is actually improving. The quality of the collateral is improving, and this is something that we can be very grateful for, and it is something that I know our credit team is thoroughly going through and ensuring that we keep our loan book and our portfolio as strong as possible. So what to expect from Ultra in the coming year? Obviously, we're working to increase our loan book. The aim is to hit 1.2 billion by the end of Q1, and obviously get our NPL back to 0, as I had previously mentioned. This is really important for us because we do want to continue to grow, but ensuring that we have everything performing and ensure the quality of our business is kept to the highest standards, not only for us, but to protect you, the shareholders. So, for 2024, our expansions are really aimed in growing our loan book and continuing to perfect our processes to ensure excellent potential for our clients, speedy turnovers of loans and disbursements, and just the full-on customer experience that when you come to Ultra Financier, that you are one of our special clients, because we are boutique and we want to ensure that the experience remains special to you as well. So I will now hand over to Trevine McKenzie, who really needs absolutely no introduction, who will take us through our group financials.
And good morning again, everyone. That was such a good overview of Ultra, that currently represents 30% of our total loan portfolio. So that's really exciting for us as well, for 2023. And of course, we expect it to grow even further in 2024, but we'll just have to wait and see for that one. So for the period ended December 31st, 2023, we stepped on our targets and we really produced impeccable results once more. That really shows that we understand the assignment and we continue to learn and grow, right? So basically, as at December 2023, we saw total income moving to $1.2 billion, increasing by 64%. We also saw profit before tax coming from that, growing by 53% up to 451 million, which is really monumental for us. We also saw loan portfolio growing from $1.7 billion to $2.8 billion, moving by 65% year on year. Assets as well, moving to $3.4 billion, up 53%. And of course, this is mainly due to the size of the loan book. Cash and cash equivalents reduced marginally by 7%, but we're still at a strong cash position at $326 million. And total debt moved upwards to $2.2 billion by 60% due to the fundraisers we did in 2023, which really assisted us with the growth that we're seeing in the 2023 numbers. Now, let's move on to the next slide. Now, as at December 2023, cash and cash equivalents reduced marginally, as I mentioned. We did promise a healthier cash balance, and we have delivered on that. Our loan book, again, increased by 65% to $2.8 billion. And this is really due to the drive of the sales team and our collections team, since sales would have increased by 128% year over year. Lastly, on this slide, liabilities increased by 57% due to the fundraisers we did throughout the year with our new partners, Mayberry, and to a lesser extent, some of our partners at the parent level. We saw shareholders' equity moving by 37%, and this is really due to the increase in retained earnings by 101%. This increase is solely due to the increase in comprehensive income for the period. Now, income would have seen a similar increase to the loan book, growing by 64% year on year. And again, this is the increase in sales is what drove this increase in income. And then to a lesser extent, we would have seen some income from deposits held, but to a much lesser extent. Now, operating expenses also saw an increase by 50%. Due to the increases in staff costs, which grew by just about 57%, as we increased capacity to manage the current demand and the anticipated demand and growth of the company. We also saw increases in legal and professional fees still under expenses, audit fees and IT expenses as we increase security. On the IT side, we see everything that's happening and we want to ensure that we are heavily protected. And on IT as well, we had to prepare for new regulations such as Data Protection Act, which comes at an expense. Now, all of this would have led to a profit before tax of $451 million, which is an increase of 53% year over year. So we did see an increase in income, increase in expenses to a lesser extent, but we were able to meet, exceed our targets in terms of profit nevertheless. Now, lastly, on this slide, I want to touch a little bit on the EPS, the earnings per share, which stood at 17 cents, which decreased by 1 cent. Now, there are some concerns going around saying that, this seems to be very minimal growth given the growth in profit for the company. But let's look at how the EPS is calculated, right? The EPS is essentially net profit divided by the weighted average number of stock units in issue. Now, the operative word here is weighted. Now, we know that we have $2.5 billion worth of stock units in issue. However, in order to get to that weighted number, we must look at how long those units have been issued relative to the end of the financial period. Now, in 2022, we would have issued just about $2.4 billion worth of shares in May or June, or between both months, to facilitate the IPO. So by the time we got to December 2022, the weighted average number of shares in issue would be around 1.5 billion. And you would see this also on the 2022 audited financial statements. So they really weren't issued for a full year, and we had to apply a weight to that. Now, as at June 2023, the weighted average on those shares would have balanced out and amounted to 2.5 billion, since they would have been in issue technically for a full year. Now, essentially in 2022, profit was effectively split across 1.55 billion shares. And in 2023, it's being split across 2.5 billion shares, which, if we look at the laws of math, amounts to somewhat of a lesser amount in terms of EPS. So to put things into perspective and put some context, if we were using the same weighted average as we did in 2022, EPS would be 28 cents per share. But because we have to use the weighted average, and it moved from 1.5 in 2022 to 2.5 in 2023, that number would have been 17 cents per share instead. Basically, we're splitting profits across more stock units in issue. Now, if we move over to the next slide, cash from operations increased over the period. Well, increased in the negative way over the period due to the lending. We are lending more, we're growing the business, and we continue to see where cash from operations is somewhat of a negative figure. But based on our estimation, based on the organic growth we are anticipating over the next year or two, we will see where this will start to change into a positive figure once we not exit growth mode, but once we get into more organic growth. Cash from investing also saw a positive change since we spent less on investing. Last year, we would have invested in short-term deposits to a larger degree, much larger degree than 2023, to ensure best use of excess cash. So where we saw cash wasn't being used as fast as we wanted it to, or we're waiting on deals to close, we would have done some investments to ensure that we're able to accumulate some income on that. Last year, 2023, we only did this to a tune of about $20 million. And lastly, cash from financing movements is mainly due to the payment of dividends, which increased by 80% year over year. Now, on the ratios, we notice a positive movement here on the efficiency ratio, moving from 50% in 2022 to 46% in 2023. And really, this means that we used less expenses to generate the income that we're presenting here today. So this is really positive for us, and we continue to operate as efficiently as possible to ensure that that bottom line is as unimpacted as possible. Non-performing loans also increased marginally, but still commendable and within our budgeted expectations, as our CEO mentioned. ECL also reduced to 3.8%, which is a positive movement, and it reflects the increase in the quality of the loan portfolio, as our CEO also mentioned. And this also had a positive effect on the P&L, because we do understand that we have to make a provision. And unlike the NPL, the ECL's provision is reflected on the income. Now, all in all, it was a very good period of growth for us. As I mentioned before, we understand the assignment, and we continue to ensure that the company is growing in an efficient way as well, while we continue to maintain the quality of the loan portfolio. Now, at this time, I'd like to hand over to our CEO, Kenroy Kerr, who will take us through where we want to be in the upcoming periods.
Hi, thanks, Trevine. That was beautifully done. I think Trevine probably gave more information on our financial performance than any other company I think I've ever listened to, giving a financial overview. And I really love the explanation about just the movement in the earnings per share and how that was broken down 2023 relative to 2022. So thanks again, team. Of course, they'll be on the call after this segment is completed. So any questions, you can definitely pose those questions to any member of the team. So 2023 was, again, a record year in terms of profitability. All of the key metrics that we track have been trending in the right direction. And of course, you're wondering what's for 2024. And we know that the reward for hard work is harder work. The reward for hard work is harder work. So we will, 2024, the targets remain as aggressive as, more aggressive than they were in 2023. Our aim this year is to aggressively grow our loan portfolio, and we have pretty much implemented a number of strategies that we'll be using to ensure that we are able to realize that increase growth and not only grow the portfolio, but still ensure that we're still maintaining a particular level of quality that will still maximize the return that our shareholders would have been anticipating during 2024. So again, the growth, we've seen a tremendous increase in the demand for our solutions, our products, our solutions, and we will capitalize on that. The intention is to grow the loan portfolio to an extent that is more than 50% of what it was during 2023. And we have on board Mayberry Investment Limited, who are our funding partners, our financial advisors to some extent as it relates to how we'll go about doing the funding. Of course, you'd have seen where we got approval from DBJ in the latter part of 2023. So we have those funds coming in along with devising strategies as to how we will execute on our fundraise during 2024. And with the demand for products at an all-time high and a partner on board that will help us with the funding, then our strategy now has to ensure that we're growing the loan book with quality loans. So the focus for 2024 will continue to be on strategic partnerships and just being innovative in terms of our products, our existing products, how we alter them to suit or to tailor them to the needs of our customers, and how we go about innovating and developing new products that, again, are not just a loan product, but actually doing our market research and identifying what the needs are and ensure that we're tailoring a solution to those needs. Our team continues to explore the opportunities in the industry. We continue to look at industries that are upcoming and have a good prospect of growth, and we're ensuring that we're leveraging those opportunities to increase our market share during 2024. And of course, with growth, we have to consider it's really about scaling and how we go about doing this. As we expand, we will also place a lot of emphasis on increasing the efficiency and effectiveness of our operations to handle the increased demand that comes with the growth, as well as to maintain the quality of our asset. And in this case, we're really talking about our loan portfolio. So we will focus on automating during 2024. One of our focus, which we have already started, is really to automate some of the recurring internal processes and to implement solutions that will not only enhance the turnaround time and enhance the customer experience, but effectively this will result in more robust and putting in place basically a more robust system when it comes to compliance and just the framework that is a really big deal for us. That's like a core aspect of our operation for 2024. So that is pretty much in summary some of the things that we're looking at during 2024. And of course, I'll just stop here because I know that there will be some questions as it relates to our outlook, and then we can always deliberate and go into those afterwards.
Thank you so much, Kenroy and team. As always, it's a very informative call with you all, and it's always a pleasure to host you. So I will not delay. We have a lot of questions to go through. So I'm inviting the rest of the team to return so that we can get started with those questions. Before that, though, I believe there's a clarification that needs to be made, and I'll hand over to David for that.
All right, so the clarification that we're speaking of is our non-performing loans for Ultra. So we were obviously reporting as at Q4, which was that 3%. Overall for the year, our NPL sat at 0%. So we just want to be completely transparent with everyone. And so as we push into 2024, our aim is to maintain it at 0% at all times throughout the entire year. So just hope that clears it up for everybody.
Okay, great. Thank you for that, David. Let's get straight into the questions. First one, what is preventing Dolla from having a consistent quarter-by-quarter performance, looking at your Q3 and comparing with Q4 results?
All right, so that one sounds like a question for me. If we look at our Q3 for 2023, we would have had a profit before tax of 105. Q4 we landed at 114. So it's not I wouldn't say it's inconsistent, it's a marginal movement, but you will see movements in the quarter by quarter because what we're doing is growing. Particularly in 2023 though, we were very consistent in terms of our sales. We were lending at a consistent rate each quarter, which really meant that the quarter-on-quarter profits would be maintained. But if you look at Q1, 2, 3, and 4 and compare that to Q3 and 4 of 2022, you would have seen a major movement upward. So in 2022, we would have seen the funds coming in at the latter part of the year, and you would have seen income increasing and profits increasing in Q3 and Q4 of 2022. Now in 2023, we were more consistent with the funds, consistent with the lending, and you'll see more consistent profits. So I wouldn't say it's inconsistent, it's a marginal movement, which is no cause for concern because we were very consistent with higher sales than we did in 2022.
And I think that speaks well to the strategy of the team and the execution of the team. So it's not so much that you don't know when the funds are coming in. It's actually a good thing to have such consistency across quarters. All right, next question is from Simon Johnson. Can Dolla provide an update on their business outside of Jamaica?
So I'll just take the finance part, and I don't know if Kenroy, if you want to add anything outside of that. But as at the end of the year, we would have seen where Ultra had just about $316 million in terms of income, which took them to just about $129 million in terms of profits before tax. Ghana likewise had $86 million in terms of income, and that's in Jamaican dollars, which took them to about $18 million in terms of profits. So as at the end of the year, Guyana would have represented just about 5% of our loan book and Ultra 30%. And Ultra keeps growing because the business is so lucrative and doing so well. And we're really proud of that. So Ultra is really taking the stage at this point for Dolla.
Kenroy, anything to add to that?
No, that was a good summary by Travine.
Okay, wonderful. So our next question again is from Simon. Ultra has been growing rapidly, a very innovative way to provide funding to that niche. What are the plans for Ultra? Will Dolla spin off Ultra? So I think that sounds like David and Kenroy.
Plans for Ultra at the moment, Simon, and everyone is basically to just continue to grow our loan book as best as possible. I know we had mentioned in the last call, that we were looking to expand into other regions, but I think our focus right now is, because of the demand that we have here, is to really perfect everything that we are doing here and continue to grow it and ensure that it will be completely sustainable before we then take the capital that we have and the cash that we have to go and lend in other countries. We definitely want to ensure that we've fully satisfied the Jamaican market.
All right.
Right. That's correct, Renee. So it's really about having the capital and ensuring that where we see the opportunity, we are leveraging those opportunities to increase the value to shareholders. And at this point in time, there's a lot of demand for the service for Ultra here in Jamaica. Not to say that in the future, we in the medium term, we'll not look at some of those strategies, but for now, we're just doing what we do best, which is lending in a market that we fully understand and have done really well in.
Understood. Thank you for that. Simon again is asking, given the room for further consolidation within the MFI sector, and that's that microfinance for our audience, is Dolla considering any M&A for current competitors or just loan portfolios? If so, what's the timeline? I've been waiting for this question because I knew it was coming.
Well, the truth is, thanks, Renee, thanks, Simon, for that question. The truth is, we have had some discussion in the past about acquisitions, of course, are growing the loan portfolio by that mean. And of course, with the regulation of the industry, we did anticipate that there will be some amount of activities to in terms of acquisitions based on just some of the regulations that comes with being that comes under the Microcredit Act. Over the last year, I believe we would have looked at entities. We would have gone in some cases 6 weeks, 8 weeks into doing some due diligence and looking at different companies. But at the end of the day, again, it's really about what brings the greatest value to the shareholders. And at this point in time, we are seeing where it's easier for us to grow the business organically just based on the level of demand that we're seeing for our services. So at this point in time, I can confirm that we are not necessarily seeking acquisition opportunities. And again, it's based on our business and how you see us reporting our figures, it's still a little bit challenging to find a loan book that aligns with our portfolio and our growth objectives. So at this point in time, based on the demand, we're focusing on expanding the loan portfolio and doing it with the opportunity that we have coming at us through organic growth. And that's really on the back burner for us during 2024. Not to say that if an opportunity comes up that we see will add great value to the business and to our shareholders, we'll not look at it. But for now, we're actually just leveraging the opportunity that we see for growth, which is through organic lending.
And just to put some context into that, what we don't want to do is to purchase a loan portfolio or a business where the financial health of that portfolio is less than ours. If we do that, then you'll see a negative impact on the NPL and our numbers, whereby if we use those funds to on-lend, we'll see better value and return on those funds. So that's something that we've been evaluating, and we find that our portfolio is very healthy compared to others in the market, and we don't want to dilute that.
And that is completely understandable. Thank you for that transparency and explanation as always. Before we go to the next question, just to rewind a little bit, the second part of Simon's previous question was asking about a possible spin-off of Ultra from Dolla Financial. Is there anything that you'd like to comment regarding that particular part of the question?
If I may take that one, Renate, Simon, sorry for not clarifying the second part, but if I may take that one, again, it's all about what really adds value for our shareholders. And when we look at it right now, Ultra represents about 30% of Dolla Financial. We are assessing, and of course, this is something that would be an ongoing discussion, maybe at the board level or at a strategic level. But at the current moment, being representing such significant portion of Dolla Financial in terms of loan portfolio profitability, you really don't necessarily want to take away from your shareholders at Dolla in a sense to bring Ultra, to spin off Ultra as a standalone company. So it's really, at the end of the day, it's really about what really adds more value to the company, to the business, and just the growth objectives of the company. And that's something that we'll continue to look at. But for now, we're really focused on growing Ultra as a part of Dolla.
Thank you for the clarification. Next question, Dolla's CSR and general marketing. Oh, this is not a question, it's a commendation. And general marketing has been notable. Good work on that. So Tashoni, that's for you and team. Brand visibility and presence has been continuous. Great work, keep it up. Next question from our community. What's the status of the approvals being sought from BOJ for new branches? I see employment ads for locations that we got no news on yet.
All right, I'll take that one as well. So the new branches we would have opened. The last branch we opened was our Falmouth branch in February of 2023. We now have a network of 10 branches that really covers the entire, we are in 9 parishes, but at the same time, we are actually servicing customers in all 14 parishes. And this is because we have mobile officers who are really out there marketing our products and ensuring that the customers are actually being satisfied. And in doing that too, we have been able to look at our data and see what's driving some of the sales and where they're coming from, and looking at where we can put a potential branch. So the process of setting up a location, as we've said in the last 2 or 3 earnings call, is a little bit different, and we are still awaiting some fine tuning to those things from the BOJ to ensure that it's a little easier to set up. But while we do that, it still gives us an opportunity to, again, really evaluate where we are, where the demand is, and where we need to establish a physical presence. But even without establishing a branch in Clarendon or in Portland, I've seen a lot of applications actually coming in from those places because of the fact that we have officers in each of those areas still servicing those customers. So the plans for expansion, we may be looking at 1 or 2 locations during 2024, not committing or confirming that those will actually happen, because again, if we are able to still meet the needs of the customers without having a physical shop set up, then we can still proceed with that.
Understood. So Dolla Financial Panama and Dolla Financial Belize are legit Insta pages. Has BOJ approval been sought for these locations also, or is the focus still on Jamaica?
The focus remains on Jamaica. I think we clarified that earlier. So the focus is based on the demand. We will be able to deliver better results by lending the funds in a market which we already operating. We know the space, we understand our customers here. And while we evaluate and look at other markets for 2024, we will definitely be leveraging the opportunity in our local market.
So I think it's an opportunity to speak to those 2 pages, though, the Panama and Belize Instagram pages. I think Tashoni would be great to chime in here. What is the strategy behind having those pages, or why are they up and running if we're not focusing there right now?
I don't think those pages are up and running. When Dolla started, we would have been looking at markets that would have been lucrative. That would be, markets that we could enter into. And of course, you know how Instagram works. If you don't secure the name, then it goes away. So it's just a part of our ambitions to get into new markets and to secure the pages. But those are not up and running just yet. But it's not off the table, but just not up and running.
Thank you. All right, next question. Is Dolla shifting more cash into the ultra loan portfolio strategically?
Yes, so as we see the demand in ultra, then yes, the funds are pushed there. We really push funds where we see more demand and more value for money. So where the demand is at ultra, then definitely. And what's good too is that ultra is a mainly secured loan portfolio. And from a business perspective, a collections perspective, and a profit perspective, because we have our ECL, then strategically it would be a good idea to move more funds there. But not to say that we're stifling Dolla.
Of course not. All right, another community question. On the Mayberry Investors Briefing, Kenroy mentioned employing AI. Is this currently being used in the customer evaluations, and are there plans to expand its use?
So since I mentioned that, let me just take that one as well. So the intention is to, as I've spoken to in the outlook, is to automate a lot of the things that we do, which will include some amount of AI. So we are not currently using AI to evaluate loan applications at the moment, because right now we're focused on building out our loan management system in a way that it can accommodate what's needed to get the AI up and running. So It's not something that will happen tomorrow because these things take time and it's a phased approach. So right now we're perfecting the system, putting in place all that we need to ensure that we have that automation in place. So it will start internally before we can link that system to a scenario where customers are able to now just go on our website, go on WhatsApp, go on Instagram and do their loan application. So it's really about building out internally first, which will take some time, and then we will move on to the next phase. But those are just some of our significant, some of the more significant things that we're focusing on for 2024. And the hope and aim is that by the end of the year, we'll be at that point where a customer can benefit from the use of the AI.
Sounds quite progressive. The company had announced plans to set up a branch in Maypen and other areas. Is it that it has slowed down plans for branch expansion in the interim, or is it due to regulatory delays? I think you would have addressed that regarding your expansion. So we can move to the next question. Does the company envision listing a portion of Ultra? Again, we spoke about this, but we do want to acknowledge that the question was received again. All right, so let's talk about your board invitations now. So there are 3 persons who were invited to Dolla's board, and they're yet to be approved or actually initiated into the board. So is it that the BOJ is yet to approve their nominations to the board?
So
Right,
for
so-
this one, oh, go ahead, Ken. Right?
No, go ahead, Shereen, that's fine.
There's a process by the BOJ, of course, to get nominated persons fit and proper before they can join the board of a microcredit company. So everything has been submitted, and we are awaiting a response from the BOJ.
Thank you. Short and direct. You discussed at the JSE conference the plan to grow the loan book even higher this year and how the DBJ facility came with certain restrictions. How are your fundraising efforts going to structure the most appropriate means to grow the company with all this debt and its covenants?
All right. So before the decision was made to do the fundraise, we would have had to do an extensive exercise to map out the budget for the year, which includes strategically raising funds at different points in time to ensure that the covenants are not impacted. So that was done, and we understand that where we are raising funds at certain points in time, the covenants would have been X and Y. And from that exercise, we understand how much we can raise and when, to just ensure that we are within the parameters of the covenants, not just from DBJ, but also or other bond rates also had covenants as well. So we are planning properly to ensure we are in line.
Okay. All right. Thank you for that. So we do have several questions about dividend payments, and the general question is this: can Dolla truly afford to be paying dividends so often, seeing that cash is needed for the business?
So I guess that one is mine also. We would have paid a substantial amount of dividends in 2023, to the tune of just about 164 million. I believe that's what we would have declared throughout the year. You see where we are paying the dividends and we still remain profitable. So yes, we wouldn't be declaring and paying dividends if it would have an adverse effect on the company, on the profits and the returns. However, we do note the concern, and there was also a discussion by Gary earlier this week that it may be worth our while to withhold the payment of dividends to such a large extent and reinvest in the company. And that's something that we consider every time we declare dividends. So we continue to consider that before making dividends to ensure that we are doing the best by the company and deciding whether or not this is the best use of funds at the time. So it's something that we do consider before we make dividends.
Great, thank you. Courtney is asking, how is Dolla Guyana doing? Kenra, do you want to take that?
No, I'll take that one. So Trevin would have already given an update on Dolla Guyana. The loan portfolio now represents about 5% of our overall profits, and the loan portfolio in Ghana represent about 5% of the consolidated portfolio, and the profitability was somewhere about $30 million for 2023, which again, since Ghana has been in operation, it has been quite a profitable venture, and we continue to do well in that market. I mean, despite all the right now we are kind of just taking note of the geopolitical tension that's there, and actually allowing Ghana to just grow and continue to operate with the existing cash that is there, and not necessarily pump additional cash in the business while we just look at what's happening and just pay more attention to Jamaica again, where there is really a great demand for products here. So Ghana continues to operate. It's still a profitable entity, but in light of some of the things that's happening in terms of the landscape, we will just continue to monitor while we continue to operate profitably in that market.
Thank you for that additional context, Kenroy. Does Ultra create a concentration risk by clients? David, over to you.
No, I think Ultra, yes, Ultra is necessary.
The audio seems to be a little bit off.
Yes.
Yes, I think.
So maybe I'll take it, David. In terms of concentration risk, we're aware that that's something that can happen, especially with the large loans that go out from Ultra. But what we have done is we have policies in place, especially coming from Dolla as well, whereby we look at the loan, we look at the sector that it comes from and the type of collateral, and we ensure that before we accept that loan, that we evaluate it for concentration risk. So that's something that we do before we do an issuance of the loan.
All right. So we're going to take 2 more questions before we close, and we'll ask our audience that if you have any additional questions that were not addressed in this Q&A segment, then please do put them in the comments, and we will share them with the Dolla team for them to address it later on. So Simon is asking, what is driving the NPL numbers?
All right, so I'll take that one, guys. All right, so aside from the impressive and the assertive collection team and the strategies that we employ, it all starts from even the prospective stages of an application. It's all due to the adjudication or verification processes, the approval, every single thing from just meeting the client through to the collection of the debt itself, really and truly.
Short and sweet, Kurt. I love it.
Not too much of our secret.
Yeah, as I would say, we don't want to reveal too much of our secret sauce.
Right, you have to keep it sauce. All right. And our final question is again from Simon. Are there any plans to combine strengths with Michaela? He's not sure if that's how it's spelled. But are there any plans to combine strengths there?
I wouldn't be able to comment on that at this point in time, Simon. I know that we have a major player on board who already owns a microfinance company, and that company has also is also a regulated entity, is now under the Microcredit Act. So that one I would not be able to provide much update on. I think that would be more at a strategic level. That if there's any decision to kind of partner or do any transaction with that company, then we let you know as soon as that happens. But at this point in time, there's none.
Okay, thank you for that, and thank you to the entire team for being here with us this morning and for sharing in such a transparent way. As always, I wanted to also commend you as a team for always focusing on your team. It is a thread that has been very noticeable in all your conversations, all your interviews. There's always an emphasis on the team at Dolla. So congratulations to you for being a strong team. And as you seek to expand and build your team, congratulations also on being able to maintain a culture that represents who you are as a company. That's a big accomplishment, and it's not often highlighted. So I just wanted to take the opportunity to highlight that here. Great job on that. So with that, we do end our Q&A segment, and I will hand over to Kenroy to make your closing remarks to your current and potential investors, as well as media and anyone else who may watch this video in the future. Over to you.
Thanks, Renate. I think we have addressed all the questions, and we went through quite a lot in terms of the company, what we have done in the past, and where we are projected to go in the future. And this is a company that is still young. It's a very young company on the stock exchange, but it's still one that it really stands out when compared to other players in the industry. When you look at just the quality of the loan portfolio, when you look at our efficiency ratio and how we have grown over time. We have companies that are probably 2-3 times our size in terms of loan portfolio, which have not been recording the level of profit that we have. And as you said, Renate, it's really about the fact that Dolla has a team that is really committed. It's a team that really works hard, and the objectives of the team are simply aligned to the company. We are our customer, we represent our customers, and we kind of understand and know what they are about. We know what they want, and we will continue to innovate and just develop solutions that will take our customers to the next step on their journey of growth. We focus a lot on businesses, which has a ripple effect on just economic growth and development. As we develop, every business that we develop, it's a contribution to the growth of the country, the growth of the economy. And in closing, I just want to invite our customers out there, persons who are out there just needing some financial advice. I'm not saying that everyone who comes to Dolla will be able to get a loan, but at the end of the day, we are a company that really looks at the small man the same way that we look at the big man. You understand? So whether you're a small shop owner or you're a medium-sized entity, at the end of the day, when you walk through the doors of Dolla Financial, or when you do that initial contact with any one of our members, it's really about finding the best solution that will help to take you on the next step of your journey. For 2024, it's all about growth for the company. We have done well year over year. 2021, 2022, 2023, every year we've seen significant growth in the key numbers for the company. And for 2024, we will just be as aggressive. We are just as committed to ensure that we deliver the best service, we deliver the best results for our shareholders, and we ensure that we are compliant with all other regulations, and just have a robust policy in place to ensure the company remains viable and strong.
With Dolla, repaying your loans have never been easier. Enjoy the hassle-free convenience of repaying your loans in 2 simple ways. 1, Bill Express. With over 300 locations island-wide, you can find a location that suits your schedule to ensure a smooth repayment process. 2, online payments. Visit billexpress.com to enjoy the flexibility of repaying your loans online, anytime, anywhere, safely and securely. And the best part, it's absolutely free. Or you can even pay on the go and save time by taking advantage of our mobile payment option via link. For any queries or assistance, feel free to contact us at 927-4881. And of course, thank you for choosing Dolla Financial.